Can you see this trend? It starts from the low and you are getting maturity of time. Basically from 9:15 till 12:30, if something moves like this is called maturity of trend. Maturity of time is the time which has elapsed here. Now sometimes what happens is the stock is moving flat and suddenly it does this. Now this is not, the time has elapsed, but this is not maturity of trend. Trend maturity has to happen slowly moving upside. This is still initiation. We have to be very clear which bar is initiation and which bar is maturity of trend and maturity of time. So both these conditions need to be fulfilled in order for us to start taking profits or to think that market is now overbought or oversold. Okay, now let's start with examples. Now, as many of you wanted, this is a daily chart, but I don't care what kind of trader you are because the same rules apply. This is Aurobindo Pharma. Look at the decline. Finally, it started to plunge. How many big bars? Red bars. 6 consecutive red bars. What happened here? There was some good result. 4 negative bars, I think 5 bars have been cleaned out by 1 bar. Stop below the low. Add, add. Stop updation and stop updation, and finally you are getting price away from 20, and because we are below 200, this is the distance the stock has traveled. So this is also a way of getting maturity of time and maturity of trend. So whatever chart it is, now some people would say, oh, you are buying below 200. This is the safest buy because your stop is here. Right? This is the safest buy because this plunge has taken out all the long positions. Let's go to look at this one. Again, daily chart. So anyone who says that daily chart is different does not know what he's talking about. Narrow range, low volatility, suddenly one bar clears out everything. Okay. 2 small red bars. So this is your initial position 2000. Stop below 200. Add. Stop updation. Add. Take off 25%. Take off another 25. 25, and because you have 4 to 5 green bars in your direction, you can take off almost everything. This was also the day we had said that Reliance is breaking out of a 10-year range. Ashok Leyland, narrow range, cleans out all the data to the left. Bears try to hammer it but cannot take it lower. So this is where you buy and put a stop. Now some may question, why don't you buy here? Because you don't know whether this red bar will start coming back. Aggressive traders can do that, but I don't think the number of times this fails justifies that. Although this is a daily chart and probably this is happened because of news, etc. But often I would like to see the bears failing first. Once you buy here, this is your ad. Once you start moving away from 200, you start taking it off. This is again chart. Please tell me what is the difference between daily and intraday? Nothing. The moment you start moving away from averages, that is the time to take it off. Near the averages, time to build position. Now is this initiation or is this exhaustion? Near 200, near averages, this is initiation. So anybody who books profit here is an idiot. Now, like I told you, a flat 200 is a resistance. What is this? Green getting cleaned out by red. Stop here, goes back down. Now 200 or 20, they are not lines, they are zones. So you cannot be exact with these averages because they are a resistance zone or a support zone. This is Hindalco. Near 200, it gaps up. So basically all this data to the left is taken out. Bears come in for a bar and again green comes in. I want to buy. Now where do you take anticipatory buy? Say you get a very huge bar and which is not ending and there is great momentum. Maybe in that case you will take at 50% of the first bar itself, provided it's a large bar. If it's an average or better than average bar, it's then you need follow through to come in. If it's bar like this one, so anticipatory entry can also be taken. Because if you enter here, then your stop is here. The risk is till the stop only. So you enter here, put a stop, entry. I think somewhere here you can add, stop updation, 25%, 25%, 25%, and rest you can get out somewhere here. data to the left, and this is HDFC Bank. These are not small stocks. Green bar, bears come in, stop here. The bear stop here. The actual stop is always below 200. So buy, add, take 25%, and as we go towards the end, you keep taking off each time you have a green bar. Simple strategy, nothing fancy, stop updation here. Each time the bears come in, I want to see what is their strength. Instead of fearing red bars, please see what is the message they are giving. We get so engrossed in our fear psychosis that we don't take the information that the market is trying to provide. This is Jet Airways, near 200. This is our stop, big green bar, bears come and try to hammer it, but 20 holds on. Okay, add, 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 add. So stop updation, stop updation, stop updation, and stop updation. Again you can see it came down to the 200 and immediately found support. This is the next day. This was declining. See, volume does not tell you whether bears are strong or bulls are strong. The volume is a bar. The only indication is how ferociously the price is correcting. If it's a shallow correction, if it's a sideways type correction, then obviously bears are not very strong. See, this was downside. Suddenly 20 held on not only for 5 minutes, for a full hour. And then the market started breaking out. Coming out of a correction, stop here and then wait for a reaction. Update stop because the rally started again. Or somewhere here take 25, take 50, and here you are completely out. There is a very clear indication if you come prepared with preconditions. How many supports are here? Closing price 20, 200, above previous days 2 to 3 hour range. So when you have this kind of a block underneath, this is strong support. And if you buy near this and the market starts to move higher, then chances are it will go. But only make sure you don't have any data here, which means price should be narrow range before this day. The more narrow range, the better. You look at these bars. Again, Jet Airways clears data to the left. Buy, stop below this range. Add, updation of stop. Start taking off 25, 25. 25. Simple. Now see here this one. Here we started from below the 200. Here it's way above 200. Hence it starts to come off. So the price action initiation should be closer to 200. Yes, because below 200 is location 5. But obviously, the stock price has to show you strong upside action. See, again and again, the problem is that we don't want to do any work. So we want software to point out everything. Okay. So if that remains the case, software cannot do too much. And because of the conditions you set, if you are setting a 1% condition, and if it was a 1.2% narrow range, it will not show you. So don't get stuck up with this software business that software should do everything. In fact, if the more you look at charts, the better your understanding will be. Some things are always good when you do them with hand. See, this is how an inclined moving average works. Each time it came to 20, it bumped off. So again, narrow range near 200, breakout, bears try to push it, 20 holds it, put a stop here below 200, add, each time red is in doubt, add, update stop, start taking off 25, 25, 25 and the rest. Again, stops are easily updated. So you have to see what average or what methodology the particular stock is following. You cannot have one canned method of trailing stop. Again, 200 tested once, 200 tested twice. So this is a retest. Now let me give you one more insight. Say the stock price is coming down and it has 3 legs. Again goes up, fails to make a new low. The odds of this high getting crossed are large. Why? Because the downside is getting exhausted. Similarly, on the upside, if you have 3 odd legs and the next rally it fails to make new highs, chances are it will go below this low. It is very useful in order to identify tops and bottoms. But obviously the precondition, which is a big rally or a big decline, should be there. See, look at this. This is your 8 period average. Keeps going, keeps going, keeps going. Again, narrow range near 200. Some of you want to negotiate with me that if it's not 200, can we buy? You're not trading my money, right? See, the more you negotiate, the more you bargain with conditions, the worse will be your performance. Some would say these are, well chosen charts. My reply for last 20 years is choose the well chosen charts where everything is lining up. You need only 5 such stocks. Holds 200, holds 20, holds 20. So if you are hanging around here, look for this to happen. This is your bar by bar. So initiation phase, right phase and maturity phase. DMA is daily moving average, SMA is simple moving average, but moving average is different for different time frames. So look at this one. This was coming down, right? Look at this bar. You wanted false breakdown. This is false breakdown. This was a red bar which finally cleaned up and went upside. Where is your stop? Stop here, buy. Okay. Add. Stop updation. Right phase. Start taking off. Big plunge. Stock retests yesterday low. Buy. Add. And around 200 it's kind of flattening out. This is a good time to take it off. The moment this low is held, a rally back to the 200 becomes operational. Similarly on the upside. Again, this is 200, right? Goes up, bears try to hammer it down. So your first buy can happen here. Second, third, stop updation. Now we start to see big bars, 25%, another 25, out. Narrow range, breaks out, add 25%. Why? Getting away from averages. Updation of stop, 25% and out. Sometimes you have all three phases, sometimes you have two phases. So you have to see how much traction the market and the stock is showing. There cannot be a fixed answer. See, big plunge, tries to go up, holds previous low. So immediately buy, add, stop updation, 25% out, 25 out. Why? Look at the distance. Narrow range, breaks out. Look at this. This is a shallow correction. Move sideways only. Add, stop updation, add, take 25% off, 25, done. It should be this simple. And the day it becomes this simple is the day that you all should work towards. Just decline towards 200. Now this is daily chart. Okay. Any difference? No. To get a strong move, stop below the low, add, take off some more, take off some more. So by this time you are in only 25. So when it starts again, we take off the rest. Basically, once this initiation is starting at 200, you are looking for expansion. Look at this. This is a plunge. Big red bar cleaned out by green. Bears try to hammer it, fail. Buy, add. Stop updation, stop updation, stop updation. Exit. Good. Narrow range starts breaking out. Buy, stop below, add, stop updation, and maybe add one more time. 25% out, 25 out, 25 out, and 25% out. This is Maruti. Now, market tendencies. Yesterday, high and low are very important supports and resistances. That is where the bulls failed or the bears failed. For people who are more swing traders, the last week high low very important. Earlier support the resistance and vice versa. So if you have this sort of a market, now this is resistance. It goes up, comes back, this becomes support. So earlier resistance becomes support and vice versa. Range expansion, range contraction, I have told you. Principle of volatility, narrow range, expansion, narrow range, expansion. That's how volatility alternates. 220 DMA give you indication of trend and strong support or resistance. If a market fails to make a significant high or low, maybe turning. I just explained to you that if we don't make a fresh high, chances are it's going down. See, this is how previous day high and low were out. This previous day high, previous day low, and these become important profit booking targets also. So if you are short here and you know previous day low is about this point, here you will start to get cautious. This is previous week high. Again, your stops are here and the price starts to move down. So the risk is low at such locations. Resistance became support. Again, no significant low made, hence the trend may be turning. contraction, expansion. This is the time you want to get long on a stock. This is the time to avoid a stock. This is a precondition. So the question is, mark entry, add events, mark trailing stop and show exits. And this is the chart. It's given in your manual. Okay, broadly, everybody has gotten the gist. We can repeat anything that you want. Why? Because we have enough time now for question and repetition. It's important to do less, but to understand it very clearly, than to do more and not understand it properly. Please remember that we are going to update stop only when a fresh intraday high is made. Okay. Now let's talk about some live charts. Now this is Kotak Mahindra, right? Now here, generally the stock is in an uptrend. On this day, it made a low. On the next day, it almost retested that low, went up. The 200 stopped it, bears came in and they failed. So, stop below this low, buy, add here. Again, comes down to 200, retest. If you want, you can add, stop updated to this place. Okay. And it going into the close, it rallies back again. So basically, this is how you trade a sideways market. What do we do here? We faded this boundary and the stock moved up to the higher end of the range. But for this, you have to come prepared that in case Kotak gets near previous day low, I am going to buy it. See, this is Jubilant. Away from 200, nothing interesting. Corrects back to 200. Here, this is middle of the day. Stop below low, buy. Add. Stop updation, add. And here you are getting out. So the risk is low when you buy near 200. See, this is NIT Tech. See what happened here. NIT Tech had a big red bar. It suddenly turned around, cleaned out the red bar and went till here. Now, even if you bought, say, around these levels, once you saw these red bars, falling down, you should have exited and maybe even taken short positions, putting a stop above 100. And by evening, you got this. This resistance basically held on so strongly that the price never went back. So a lot of times, market will confuse you. So every time you have to keep seeing signs that is it still working. Don't take anything as gospel, because everything has certain odds of working and certain odds of not working, and it is not your fault when it does not work, or there is nothing wrong with the pattern also. See, this is very interesting. This is India Bulls housing. Now what happened here? Previous day we closed around the 200. Next day we gapped up. Okay. After that the bears came in and hammered at the 20. Once, twice, not successful. Immediately buy, add, update, stop, and it goes up. The moving average, pink moving average is 8, blue is 20, and green is 50. All moving averages do the same thing, but on a different time frame. See Bajaj Finance. Now Bajaj Finance, look at this. It declined the previous day and started down, hit 200. The bears tried to take it lower, failed. Buy. Add, update, stop, and here you take your money off the table. This is Friday. Often people latch on to one stock like Ajanta Pharma. Friday it went up, but for many days it was coming down. So when you have stocks in a big downtrend, they make for great intraday trades also. Now here the previous day price closed below the 200, which means that the market may have turned into sell on rally. Now we are below previous close 20, 200 and whatever was the previous 3-hour range. So market opened, went up and held the 20 and finally started coming off. So always the first pullback tells you something about how strong or weak the pullback is or the particular stock is. So all you have to do once you find a stock which is in a downtrend, it keeps coming down, keeps coming down, keeps coming down. So this is a stock which is in a downtrend. Every day in the first 15 minutes it breaks previous day low and keeps going lower. Now you would say, you said that if there is a plunge you should buy. You should buy only if the stock shows a strong reversal candle. If it does not, you should not buy. Like here, can you see any reversal candle? Can you see any reversal candle? In any of these candles, any candle is a strong candle. So this happens, we wait. Then again it starts to clean out the green and the market has failed to make a higher top. I mean, in case this was positive, it should have gone running up. So the ORB helps you decide which direction to take. We know what is going on, but we want confirmation that the market is acting in the manner we think. List of 10 stocks. These are the stocks I had some days back. See this one. Titan. We are getting a decline. First bar on Titan is down. So you are seeing Titan, and I will not start speaking till you see the chart. Decline, first big red bar here, immediately got cleaned out by green bar, then another green bar. What to buy? Put a stop. Then a big green bar, red bar, green bar, add. Add. Stop updation, and it keeps going. Here, your measurement of trend starts from this point. This is your total trend. But it came ready with a precondition. Now this decline need not be above 200. It could below 200. It could be above 200 also. The bigger the decline in terms of trend and time, the bigger the rally you will find. See, every day in the morning, you should know, am I looking to buy the dip or am I looking to sell the rally? And that depends based on the mode you are in. Like in a strong stock, we want to buy the dip. In a weak stock like Ajanta Pharma, buying the dip could be dangerous because daily chart, the stock keeps coming down. This is what I used. That extra information was because that best stock was used previously. See now here you see Titan. Immediately at the open, we start breaking previous day low. Tomorrow we will learn that when range expansion occurs, it generally starts from the 200 and within first 15-20 minutes it tends to break previous day low or high. Now you see this retracement, very shallow, holds 50% of these 3 or 4 bars and again comes off. So these things can happen in several ways. Now see, this chart, big bullish bar below 200, immediately buy. And then you have a retracement which does not take this low out. So add, right? Update stop from here to here. Add. And what is your approximate target? About 200. So this is another way of playing a sideways market where stocks make a double bottom or don't show follow through, and then you are able to take things on the other side. Can you see this bar? The spike we have. See this sort of spike? This is the spike or the plunge you are waiting for to get short on. Similarly, at the start, bears actually took the market lower, held 200, and immediately above this bar you could have bought. So there were trades on both sides if you were ready. This is near 200, so chances are you were ready. But when it started going up, see the speed with which it went up. The moment this green bar's low got taken out, you should be ready on the other side. Okay. Generally, I prefer high 3 digit or 4 digit stocks. Why? Because a 4 digit stock, 1% means 15 bucks, 2% means 30 bucks. So tend to move much more in the higher price stocks. One more thing I will show you. This was a spike by the end. Next day, market opened up and immediately started to fail on the downside, and you got this decline. So it's not necessary that the decline continues till the end of day. It could be in the first 1 hour or so also. But the pattern is that since you had such a large up day, there will be some kind of retracement. See, this is CAT. Yesterday, it opened up, went down to 200, immediately came back. Again, bears tried to the lower low, failed. So these are patterns you have to learn to play. This is 1358. This is 1375. Again hits previous day high. So your target was ready with you. Hmm. Hmm. See what happened here. CAT is trading below its 200. In the morning it opened up. Now what is the mistake you can make here? That it opens higher and immediately you buy. And where are you buying? At the 200 period resistance. So you are preparing for failure. Hit 200, came back, hit 200, came back, and finally this is what you got. So always watch which side is winning, which side is able to take resistance out. I track futures price, but that really doesn't matter because they will not go in opposite direction. Again, see this green bar immediately whacked by red. Stop above the high and see the decline you got. That is why buying on the basis of one bar, never intelligent. Now see what is lining up here. This high and this high and this high, you have multiple highs in a line plus 200. So immediately it's lining up. So if CAT is in your zone, what you want is that it hits previous day high and starts to fail. Can you see this? Look at the spike and immediately more than 50% starts to get cleaned out. This is the safest trade, way above 200. And certain stocks keep doing this. Canfin Home keeps doing this sort of action. Look at this red bar. Massive red bar. Opens, goes back to 50% and 200 and yesterday close and 20, etc., etc., etc. Short here and you get lows of the day. Now how will your eyes get trained to do this? By doing it thousands of times. That's the only way to do these things. Now see this one. Do you want to buy this gap up? Look at the distance between 200 and this gap. So this is a gap I would not buy. As you can see, it hardly got any follow through. Narrow range, last 2 or 3 hours, right? This is a narrow range. It breaks down and goes lower. Although I would be happier if this narrow range happened near 200 and then broke down. So you always have a choice whether you will take a setup or not based on your comfort. Whether it works or not, that is in the hand of the market. Now, what's important to see here, can you see this big green bar? Then it made another southern low, then it went up, again came off. What is the message you are getting? That somewhere the market is trying to bottom out, right? So, next day, the bears again tried and they failed. So if you are coming into this day, the market is already fallen and you are trying to trade this ORB on the downside, then you should be ready for this. As you can see here, the bears were failing. So always keep this in mind. Read market action, who's winning, because that is the place where the guys on the opposite side can get trapped. This needs thorough analysis. There is no question about it. Some of you wanted to know false breakdown, right? This is Bajaj Finance. Now look at this decline, right? What happened here? It opened lower, went up, bears tried to hammer it again, couldn't succeed. So this is smelling like a false breakdown. And as you can see how this guy went up. So not only can you trade range expansion, you can trade previous day support resistance also very effectively depending on the market. If the market is trending, you are looking for more trending ideas. But in general, the best futures plays are where you get no follow through. Here, the bears got no follow through and hence all these guys got trapped. So the more consistent strategy is the no follow through strategy. Big red bar. goes back to 200, hits 200, comes off, goes back up, hits 200, comes off. So your stop gets updated here and slowly it starts to wilt because the third time it never got to 200. So immediately what is the message? That 200 is a strong support and it starts to come off. So when it starts to come off, the message got from the bears is at 200, things are looking strong. Okay, now let's have another 15 minutes of questions, but please ask relevant questions. This is the method I do. I am not going to dilute it. So don't tell me I should watch this and that because this is enough to make money. If you can't make money with this, you cannot make money with anything. So make sure that you don't break the legs of the system because what I can see is that many people will add many other things and the recipe will be losing its authenticity. Sir, if I have to suggest a few stocks, then why are you here? See how many stocks, once you know what to look for, it's very easy to scan 200 charts. Why? Because I will not waste any time looking at Power Grid and NTPC etc. So automatically 30-40 stocks are out. Then I will look at only high price stocks. So I will start from the top. So the moment I start getting below say 650, 700, I am not interested. So that eliminates several stocks from the bottom. So between 650 and say 3000, how many stocks are there? See, previous day high and low you will understand better tomorrow. Why? Because like I said, markets move in two phases. One is trending, one is trading. On the trending time frame, the averages will hold. On a trading time frame, the high and low of previous day will hold because there is no trend. So that is when you use the low and high of the previous session. So question is not making up mind. Question is what you are comfortable with. And once you have traded enough, you will see what you can understand better. So my sense is try both and specialization is always better. Position sizing is the same story that initial position will be based on 1%. Once a stock starts to rally, then each additional position can have a separate stop. So because you are updating stocks, there is no way you can lose on the first position. As far as I think, there is no level 2 data in this country. Those 5 bid asks are not enough. And level 2 data only complicates matters. It does not simplify. I trade several stocks which are in futures, but index remains my core competence. In the market, you have to find your niche and keep doing the same thing again and again and again and again. if you want to become a master of one thing. The stupidity that happens on television, where 500 stocks are discussed every day, that is the reason people don't make money watching television. Question is, what's the definition of big bar in terms of percentage? Sir, that is why 15-year-olds do much better than educated people, because 15-year-olds know what is a big bar. Any bar that is bigger than the average bar size for the last 20 bars is called a big bar. If I tell you percentage and it's 0.2% higher, then you may not take it, or lower, then you may think it's not a big bar. So don't, try to make it too precise, because market has a mind of its own. It's never precise. You have areas and you work on those areas. Yes, sir. All stocks are being, all time frames use 220. So everything told applies to all time frames, all stocks, all things, commodity, currency, what have you. If specific index is flat, that is a precondition. So if it's flat, don't trade it today, trade when it breaks out. Heikin-Ashi, according to me, adds no value, because if it's a trend, you should be able to make out from other charts also. Heikin-Ashi is nothing. It takes 50% of the previous bar, and if the next bar is stopping from above 50%, it will show you a bar, otherwise it won't. See, Reliance, because the stock is in an uptrend, you have to be looking for buying on decline. So yesterday the bears pushed it to 200, and then from there you got a large rally. You people identify initiation, ride, and maturity. Again, if you move back a little bit, what does the average person do here? He goes short into 200, and what happens next? And is this rocket science? So watch list can be anything where you have setups, things which are close to 200, or things which have sharply declined, or where there is a change of trend, wherever there could be a possibility of a trade happening. No, sir, you cannot understand anything about buyers and sellers. That's a very non-trained, silly way of trading, because they can change on a dime. Sir, EMA, SMA does not make a difference. Hardly few points. It's not that SMA will give you buy and EMA will give sell. So don't worry about averages as long as you have them. 8, 20, 50 and 200. Those are my favorite averages. You can decide, I don't want to see 50, 20 and 8 are enough. See, it all depends whether a certain chart is testing 50 or 20 or 8. Different charts test different averages on the basis of the trend they have. So last half an hour we have done real time examples. So I don't think you have missed anything. But there will be more examples. So try not to be offline. And if you want to do intraday trading, please get better internet, because what will happen is that poor internet, your stocks etc. will get eaten up, and then you can't do anything about it. Now look at this one. This is also very interesting. This is close to 200, not very far off. So okay, let's see what the bears can do. Got this large bar. You waited and you waited and you waited. The bears tried to push it lower. Were they able to take out even half of these three green bars? Because you can imagine that these three green bars are basically one bar. So look at the correction. Isn't it shallow? So that is where you go hammer and tongs. See, is open equal to high, open equal to low? A lot of novices tell me, but I don't think any of them makes money. There are a lot of things which are important. Buying at the right location, buying on good execution. This is nonsense which goes on television or even on the internet. But I have not seen any empirical proof that it consistently makes money. I think 945 is better because initially there is volatility and you need to assess which way the market is coming out of that range. Why can't you put 200 DMA on Bank Nifty? If you have rolling futures, you can put. See, BTST is rubbish again, started by television and small brokers. What can you make in half an hour? If you couldn't make money all day long, again 2, 3, 5 rupee type of trading, that does not create wealth. I have not heard anybody who has bought 3 houses with BTST. Sir, we are not here to discuss BTST. So let's focus on what we are here to discuss. You get enough BTST on TV. See, there cannot be a blanket answer whether one should re-enter if a stop is hit. That varies from location to location and stock to stock. But in general, you should re-enter if everything is still in order. The best trades work immediately from the beginning. It's a non-starter for me if my trade does not work out within 1.5 hours. Sir, I am not here to discuss what is moving average envelope. I am here to discuss what I do, and it will be useful to ask me questions regarding that. An intraday trader is an intraday trader. He is out 320, whether a position works or does not work. Swing trading will happen tomorrow. Okay, there is some demand for money management. Please tell me how many are interested, because we can't be doing a topic for two people. Sir, instrument is is of your choice. Okay, the chart has to be of cash or futures because that is what gives you better trade management. If you do option or do future or cash, that's all up to you. So listen, I don't care about expiry because my opinion is that most of the time expiry has a trade if there is a big trend in either direction because trends get accentuated. Other than that, on a random expiry, I don't think there's great amount of difference. So if the market is short and is been declining for many days, then whatever happens, expiry will be positive. And similarly, if a market has rallied, it will come off. But if a market is kind of neutral within a range bound, then even expiry will be range bound. Okay, since we have demand for money management, let's go back there and talk about it. See, first issue is that this is my money management. Can be different from what is given in books or what is given elsewhere because there is no one method of doing anything in the market. There are several methods. So my money management is geared more towards futures trading. So number one, I will risk only 1% of my capital on any given trade. Now this 1% is the first trade. Once I update my stop, I only need a stop the incremental trade because my current trade is already in the profit. So that way, I think you don't need as much capital. So as the stop keeps getting updated, more your positions get into profitability. 1% is generally sufficient. The other thing is, I don't care about winning rate because that does not make money. What makes money is the size of move and how much you have on. Generally, the effort is to ride winners 2 times of losers, and that should be difficult because when we are entering, our stop is very close to the 200. But if it starts to work out, forget 2 times, it can go up 3-4 times. And add to winning rates. Adding we have spoken of. So that is a way to add. But adding should be done early, not late. Otherwise you can get into trouble. Now the math of trading. Take sample of 100 trades, 50 winners, 50 losers. Winning trade makes 40 points, loser takes away 20. Again, this ratio can be much better. Winning position is 8,000 after adding price. So take initial position 4,000, then add 2,000, add 2,000. Losing position is the initial position because you are not adding at all. So gross win is 1 crore 60 lakh, gross loss is 40 lakh, it is 1 crore 20 lakh. Success rate is not important because winning 60% of the time is enough. Even 50 is enough. Half of losing trades sometimes can be made back because when a market is not giving you follow through in one direction, sometimes it gives great follow through in the other direction. So hence you can halve your losers by trying to reduce losses on the other side. Now let's talk about an example of how money management can be done. Say you have a capital 5 crore, 50 lakh, 5 lakh, whatever. Divide it up into 10 states. Why don't you trade with the entire money? Because sometimes you will not have time to recover. So even if you lose one state, you have 9 other states. So you have plenty of capital. Because in futures market, losing 10, 15%, 20% of your margin money is not a big deal. So hence, you need to make sure that you have enough money. This can also include your stocks, mutual funds, what have you, but liquid. So use one stake at a time and use only 1% of the overall liquid cash. So maximum loss about 100 points is about 5 lakh on a volume of 5,000, and maximum loss per day of 10 lakh, maximum loss per week of 30 lakh. Why is this important? This is important. Sometimes you get streaks of losers, and a bad streak where you are not thinking properly, you can end up losing 30-40% of your trading capital. You don't want to get into that situation. Why? Because sometimes you cannot come back, because if you lose 50%, you need to make back 100% to get even. Average win 5 lakh, average loss 5 lakh. I have taken this for ease of calculation. But as you know that at least 2 times should be there. So even if you are doing 10 trades, 6 of them winners, see sometimes the winner will be 2 lakh also. So what I am talking about is average. In 6 trades, 5 lakh per trade, you made 30 lakh. 4 losing trades, you were able to close 2 at break even. So we lost only 10 lakh. So 20 lakh per month can be taken as a reasonable return. For your capital of 50 lakh, trading margin of 50 lakh, but overall trading capital of 5 crore. There has to be objectives of your money management plan. For some people, at least futures traders, risk of ruin is most important. For somebody else, it could be protection of capital. So MICE is on the high win rate of system. Average winner or average loser are often similar in size because they are monster winners. There are some winners also. So the idea should be, when the market is kind, you try to make it large. When the market is kind of sideways, you tend to go slow. You can change your volume also when the markets are sideways. This is a trading plan, and now that today's day is over, I would expect that all of you make a trading plan based on this. What sort of risk you will take, what instrument selection you will do, time frame, trading setup, etc. And this is a business plan. Like any factory would need a plan. Similarly, a professional trader has a plan, and he keeps working on all of these things, trying to get better. Now this is the trading plan for Bank Nifty that I maintain.
Warning, internet connectivity has been lost.
So first assess whether So first you assess whether the market is range bound or sideways or trending. So why is that important? That is important so that I am ready to either fade the boundaries, which means at previous day low we are doing buying, and at previous day high we are doing selling. If trending, what are you looking for? You are looking for a less than 50% correction, or the moving averages should hold, or the pivot should hold, and that would indicate that the market is trending. And there are locations. They can give you location 1, 2, 3, 4, 5. What are the locations? What are the possible stocks where we could have setups? So the setup is often made on the current day, but location tends to develop on the day before. Also, we look for approximate target in case certain things start to work out. So that can also be assessed based on what is on top and what is on the left. All this is part of pre-preparation. See, let's get one thing very straight. If you guys are not coming prepared, you have less than 50% chance of succeeding. Why? Because by the time you find your setup, the stock would have run. But if you are ready, then you can sometimes even buy as the red bar is going towards 200. So this is the issue which needs preparation. What is the way of journaling trades? Put in trading journal, Google will tell you everything. The idea of that is to analyze what you did well, what you did poorly, what you need to improve, what is not working out, what is working out. Unless a performance is measured, you don't know where you are going wrong. If my say 50 lakh becomes 30 lakh, I reduce volume, which means if I was doing 5,000 earlier, now I am doing 2480 Bank Nifty. With that 2480, I get back to 50 and then get back to my original volume. Why? Because that lower volume helps me come back. By doing the same volume, you will sometimes get under psychological pressure. Well, sample trading plans are all available, many of them on internet, and I don't have many plans. I have one plan which is already there in the manual. Tomorrow I will discuss pivot theory, index trading, news trading, swing trading, and investing by traders. So I have told you all that I need to tell about stop loss, nothing more to tell. About Fab 4, please make notes. If you are not making notes, things may not be repeated. Previous close 20, 200. Previous day 2-3 hour, last 2-3 hour range. Above this becomes a block of support. Above this, it's buy on dip. Below this, sell on rally. See, that has to be part of your trading plan. Okay, you can make a note that each time 50 lakh becomes 1 crore, I'll take 50 lakh out. Somebody else may think 25 lakh I'll take out. That you have to make it a part of your business plan. No, sir, this is not a covered call seminar. This is a trading seminar. So I don't want to stick in too many things because then things tend to get diluted. See, those timings are the best suited for a reversal, but I like to trade any future where people are stuck on the other side. Buying a future after everybody is in is the best way of losing money. The novice will always lose money. So the plan should be to become some sort of an expert. But if you think that you need a checklist of 5 things and if you just prepare one, you should be through, life does not work that way. Again and again, I am telling you, I have given a set of preconditions. Study charts overnight if you want to be successful the next day. Sir, I am not here to discuss the book. I don't know what book you are talking about. See, TV targets are different. They are based on price action. If there is an important high nearby or low nearby, that is generally a good intraday target. But target is nothing in isolation. It all depends on your time frame. Sir, options is not planned, and basically again and again I am saying that the instrument does not matter in this strategy. This is not a forum to discuss the intraday book. This is a workshop. Let's focus on what we are talking about. Well, I don't invest for 3-4 years, but we have services which do for people. Everybody need not do everything. Do what I am good at. You should do what you are good at. No, sir. Fab 4 was just reviewed. I cannot keep repeating the same thing. See, if you are planning to do swing trading finally, then start with swing trading. But if you are planning to be intraday trader and you start with swing trading, then you are not trying to gain the skills of intraday trading by doing swing trading. But the useful is master one pattern at a time. Like I have given you three preconditions, or I have told you some places where locations are there. Master one location at a time. That okay, I will sell each time previous day high is hit or previous day low is hit, or I will buy each time I find a range breakout. So master one thing at a time, otherwise you will get quite confused. See, while I do use news in trading, but if you have to hunt for that news, it's useless. The news often will be so blatant, it will be flashed all over TV. So that is the idea. So that is the mistake you are making. Why setups have failed? There is no reason why setups fail. It's like saying why Virat Kohli only scored less than 10. He was doing the same batting he does all the time. Get this why out of your mind, otherwise you will become TV anchor. Setups can fail all the time, and that is what you need to be ready to manage. So I am not interested in algo trading, so I haven't studied it in detail. You don't need to study everything. If something is working for you, focus on that. And I have no shame in accepting. I don't know certain things. I don't want to know certain things. So you see, 5 or 6 losing days can be expected in any strategy, and it will be no fault of the strategy. It is life is. But the first thing you do is get smaller. Don't change trading plan. If trading plan is wrong, then you shouldn't be having that plan. But if you start changing your strategy, your stop, your this, your that, then there's a problem. Because the moment you change your strategy, that strategy will start losing. Make the best trading plan possible, have a well tested strategy, and then live through the good and bad times. But if you are not trading well, if you are not thinking clearly, get smaller. Entry is not very important. Yes, important, but not very important. Exits are important. Why? Because entries you still have 5 or 6 rules and you are not in the market. Exit, you are in the market. The control is of the market. So exit, I don't think you are in control. There is some demand on location, whether it's 20 or whether it's 200. 1, 2, 3, 4, 5. Light, light, medium, heavy. This is not the place you should be buying. The same applies to 200 or any other average. Well, if I have to study annual, quarterly report, etc., then we won't be here. See, you have all seen fundamental geniuses who have been proven wrong all the time. The important bit is that in this country, please tell me how many of you correctly file your returns. So you are taking the word of management. What the way I look at fundamental is that it should be a good business. If it's a good business, even the bad company won't do so badly. Like Bajaj Finance is a good business. Avenue Supermart is a good business. So once you know if it's a good business, then the largest companies they keep doing well. And as you've seen over the last 5 or 6 months, these companies keep on making new highs. See, I don't often say shorts in the system, long in the system, etc. And even if I do say, it is based on the overbought or oversold situation that I have shown you on these charts. There is no way anybody can say whether shorts are huge or longs are huge unless it's an extreme. So, forget about that. The chart is the only objective thing. The bar is the only objective issue. If you want to go in the realm of, I thought this and I thought that, that is not how I trade or any successful trader trades. No percentage, you need to have a broad idea that okay, now there is, I can see a lot of air between the price and the average, hence it is way away, and you don't enter unless you see green. So let it go for 10, 12, 15 bars. When you see green, that is the time to enter. Sir, if I start discussing the book here, then our current material goes for a toss. I don't want to open up too many fronts. People who have bought the book should study the book. Workshop is different from the book. I recommend no technical indicator, because what is the input of all technical indicators? The price. If you can read the price, why do you need indicators? I don't know about the difference between Zerodha and Falcon, but I am just more comfortable with Falcon because Zerodha charts, they don't show a whole lot of data, and when you scroll them, they kind of move in a funny manner. That's my opinion. But as long as it's a decent package, doesn't matter which one. See, psychology, mainly the important thing is first good habits, which means getting up 5:30, doing your walk, yoga, whatever, eating properly, sleeping well, because unless everything falls into place, psychology will not get fixed. The other thing is taking responsibility, taking decisions, okay, and understanding that there is always room for improvement, doing some kind of meditation, because losing pressure and losing money can put a lot of pressure. You should be able to take that pressure. So the idea is a physical training to keep the mind fit plus mental training. See, beyond a point, there is very little in mechanics that anybody can tell you. Beyond a point, it's all about to take the hard knocks. And that is why psychology is needed. All of you want to know if by adding X, Y, Z, will things get better? They won't. Otherwise, I would have added. So, unless you accept the uncertainty, psychology will not, fix itself. Moving average and pivots is almost the same thing, and we'll see that tomorrow. So just hear me out till tomorrow. All of these things are basically following the theory that markets are in equilibrium till they are thrown into a disequilibrium, and then they find a new equilibrium. I don't think that is a great idea of aligning your stocks to the market, because in any average market there will be stocks which will go up, there will be stocks which will go down. So don't think that if the market is not, you will do only long trades. The other way is also possible. Pre-market open is nothing but bids. That is the indicative open, so that stocks don't gap up beyond a point. Sir, you can control nerves on volatile days only if you know the location very clearly. If you don't know the locations, then you will get all flustered and make rash decisions. Intraday trading should be done only with people like Zerodha, because otherwise the commission costs will eat you alive. The best trades are where you have a nice idea of where the market can turn from, and you put pre-orders. But nothing should be a rule. Sometimes that is possible, sometimes it's not possible. See, what you can do is you can buy 50% initially and put some orders below the market. But the better your entry price, the more money you will make. So try to buy when the market is coming against you, instead of trying to chase the market both while selling and buying. I think today we have finished up an hour earlier. A, because we started at 9:30. Generally in a physical workshop, sometimes it takes about 10 o'clock because flights are late, people don't reach, etc. Plus, tea coffee breaks have been short or non-existent. So we are almost getting to the end. If you want to enjoy the weekend, I will let you go by 4 o'clock so that you can review material. Tomorrow morning we will have again a question and answer session so that you can again, after going through the material, ask fresh questions. And tomorrow maybe it will be a bit longer because today we skipped the introductions also, because given that we are online, etc., introductions did not make too much sense. But if you people are interested, we can spend some time on introduction also. See, I don't see a purpose of whiling away in here. So maybe it's a better idea that we call it a day at 4. Tomorrow again we meet at 9. 9 to 9:30 we do question answer, and then 9:30 we start again. And if I can free you again by 4:30, you'll be rested for Monday's market. Otherwise I can easily make you sit here till 6 o'clock. For the moment, I think it is only a square off, but there are plans that there should be delivery settled. Let's see. Sir, if after attending 2 days of workshop you still need guidance, then there's a problem. I will free you early enough so that you can spend your 2 hours. See, unless you stop looking for guidance, you will not stand on your own feet. So, I have told you everything there is to know. By tomorrow evening, you will know much more, and then you should practice. The idea of workshop is to make you self dependent. So let's not get into Monday trading. I am giving you the tools. Use them, practice them overnight. Look at different charts. If you come back here, show me 5 charts. I'll comment on them. But let's not start a TV show here. Sir, you are asking me how much I can average. I want to ask you how competent are you? It's like, any cricketer asking how many centuries will I score? It depends on your technique, your practice, your persistence, your passion. I have taught 73 people here the same thing. Only top 10% often makes it. That is the ratio everywhere. Are you in top 10%? The day you can answer that, don't expect right now. First work hard, first become consistent. After that, what is 30%? You will make 50%. I don't want international markets like, mad person. Okay, I'll once in a while glance on it. It's not like I get obsessed. If the market gaps up and holds the gap, which means bears try to short but fail, then you go up. If bears try to, bulls try to get long after a gap down and fail, you get short. There cannot be a blanket answer. Why? Because sometimes gaps get filled, and we'll talk about that tomorrow. I think that checking of global indices is done by TV channels. But unless Dow is down 500 points, it doesn't really change your trading strategy. See, all these things are for novices who think that if you watch Nasdaq all night long, you probably get some better insight. For me, it doesn't matter what I think. What matters is what I see. If I see a green bar, I am buying. If I see a red bar, I am selling. And that's the simplistic attitude you need to have. Otherwise, you can make the khichdi of your thinking and nothing will come out. Each time you think by looking at 5 extra things, you'll know you won't. 50% rule applies to everything. It even applies to swings. So 50% is basically the pivot. If you see the pivot formula, it is high plus low plus close divided by 3. I don't find any value in Heikinashi intraday. By the time Heikinashi tells you, why shouldn't you look at the chart directly and make assessment? There are no automated machines which can decide for you. And all of these, boxed in canned systems, I don't think very well. I like to see who's winning, bears are winning or bulls are winning. That Heikinashi can tell me. Again, Ichimoku, Ishimoku, price tells you much in advance than all of this because the input is price. Okay, there is one request of checking the Maruti chart. Let's see. See now here, big green bar almost from 200. Bear slammed it, unsuccessful. Slammed it, unsuccessful. Slammed it, unsuccessful, unsuccessful, unsuccessful. All day bears were unsuccessful. And finally, see what's happening here. The 20 is getting held. So Maruti is giving an indication it wants to go up. Right? Now again, previous day, big green candle, bears come in, try to take it lower, can't do that. Very small dip. See, this is a gap up which started here. Consolidation near the high. So immediately the indication is it's going up. Yes, I see prices in Falcon and trade through Zerodha. Patterns are patterns. Once you get used to them, anything is easy to spot. But like I said, futures, the better strategy is doing the no follow through. That if we are at yesterday's high and we start failing from there, the decline is much bigger because people are long. Bharti is not the best trading stock. Let me be clear on that. For yesterday, would I buy this? I won't buy this. Why? Can you see the action on the left? There is way too much resistance which will stop the stock. So initially it's not a buy. It goes up, comes down, again goes up and fails at the intraday high. What does that indicate? There is no buying at higher levels. So the stock comes off and plunges. See, now I can't get into individual stocks because that way there are 5,000 stocks and it will take all day long. I think we have done enough examples. Please go through things yourself and then ask me after making the attempt yourself. I can, spoon feed all day, but unless you work on something and then come back, the value of the knowledge will be limited. So let's come back tomorrow at 9 o'clock sharp so that we can have half an hour of question and answer before we go forward. I like this finishing by 4 because it gives you time to rest, to study and then come back fresh again. So we can start at 9, maybe tomorrow also we can be free by 4:30. Okay? Take care.